Welcome, everyone. It's my great pleasure to have my colleague Ruchir Sharma here today. Ruchir, as everybody should know at this point, is chairman of Rockefeller International. And today we're going to talk about his much anticipated top 10 predictions for 2024 list. But before we get to that, Ruchir is also, as I think everybody knows, an accomplished author. Breakout Nations, his most prominent book. He's got another one coming in June. We're going to wait on that. We won't tease it out other than to say it's coming. He has, for the last 10 years or so, as the year comes to a close, looked ahead to the year in front, now 2024, and put together a thoughtful list of 10 things that we should be looking for in that year. So we're at the 2024 top 10 list. He's called a whole bunch of things over the years. He, at a minimum, gets everybody thinking about some of the things that might happen. And his list this year fits with all of that. There are some really fascinating things in it. So in the interest of time, I'm just going to get to the list, and we're going to start right at the beginning. Thank you for being here, Ruchir.
Thanks, Craig.
Again, global elections. Almost half of the world has an election, a major, federal, national election in 2024, right? That's the number.
Yeah, in fact, data going back almost 2 centuries, to 1800, shows that there's never been a year like 2024. Such a large share of the world's population is going to be voting this year. And I think that there are 2 implications we need to keep in mind. One, that leaders around the world today, especially in the developed countries, are pretty unpopular. There's been a lot of focus on Biden's approval rating, but it's not just a US phenomenon. UK, France, just look around the world, especially in the Western world, and you find that approval ratings in general are at record lows. But the other implication is this, that it's very interesting that in the last few years, 30% of governments are getting re-elected, only 30%. In the 2000s, 70% of governments would typically get re-elected.
Right.
Because there's an advantage when you're fighting for re-election, because people know you, you have the bully pulpit, you have the high office, so you're able to use that. In the last 3 years or so, only 30% of governments have won re-election.
It's a remarkable
so the trend is
shift.
down. Yeah, the trend is down. In terms of from 70, it's been steadily coming down. It's now 30%, which means that a lot of the leaders standing for re-election this year, and there are lots of people going to election, are likely to lose if you just look at recent history. And that also sinks in with the fact that the approval ratings are very low.
So the approval ratings, though, are historically low, or?
Historically low.
Historically low.
In terms of, since we have data.
So you're going to do some more work on why people are even more discontent. Because if you go back in history, approval ratings for a lot of governments are on the lower side. But this is a startling 70 to 30 is a huge change.
Yeah, in terms of how much are winning elections, and even their approval ratings are in the 30s, right? Which is like really low compared to what it used to be. And even in America, presidents had an advantage when they would stand for re-election. But what we've seen in recent re-elections is that the gap they had in the first time to the second time, their approval ratings tends to wither away with time. So these are very important changes which are happening. The second trend, which is an offshoot of this, is this, that because approval ratings are so low of governments around the world, they're going to be even more inclined to spend their way out of trouble, right? Because their approval ratings are so low. And what's the easiest thing to do is to spend other people's money. And historically also, we've seen a pattern that when in election years, governments tend to spend much more. The problem we hit this year is that the government's going to try to do that in places like the United States, or even in some places in emerging markets, from Mexico to South Africa, when the deficit levels are at
already high.
Very high, and in fact have seen a step function increase in the post-pandemic world. Take the case of the US. The US ran a budget deficit of around 3% of GDP for the last 20 years or so before the pandemic. After the pandemic, we seem to have settled into a range of above 6% of GDP, and that's likely to be there for the foreseeable future. So you already have a very high deficit level. On top of that, the spending pressures are going to be there because that's the easiest thing to do to try and at least win your way back to re-election. And this is not just true of the United States. As I said, it's true of many developing countries.
The United States is, frankly, one of the outliers now, right? I mean, it's 6% of GDP.
In the developed world, it's a total outlier. There's nobody in that zone of 6% of GDP. But there is this sort of confidence, some may call it even arrogance or hubris, that because we're the United States, we're the world's preeminent economy, we have the world's reserve currency, we can run whatever deficit we want until we can't.
Yeah.
So I think that that's the big risk this year. And I think that that's what I've said, that the bond market is going to be much more concerned about this.
I read this, which is interesting
Yeah.
because when we were both much younger, you had the bond vigilantes, particularly in the 90s, right?
Yes.
I mean, yeah, and it's back now.
Yes,
You're saying that they're going to be monitoring this spend, and that's going to have an impact on rates that might be unforeseeable.
Exactly. So in the past, I'd say the bond vigilantes were more focused on inflation, like they have been for the last couple of years.
Yeah.
As the inflation threat has receded, I think the focus will turn in terms of the deficit threat. And so in bond market lingo, what we call it is the term premium that investors demand, I think is likely to be much higher than what it was in the past.
What's amazing is that this was in the early 90s when Clinton first ran for president. Bob Rubin, remember, was his Treasury
Yeah.
Secretary, and they were very focused on this, on
Yeah.
deficits, on interest rates, and on bond vigilantes. Immigration. You had very thoughtful comments here on the magnitude of immigration in the United States context. Actually, in all the countries, you're adding legal and illegal. But when you put those together, immigration is at historic highs in,
Yes.
in recent years. And you think that's part of the reason why there's been some pressure taken off the labor market and maybe pressure taken off of inflation. You see that all the way through.
So I think one of the big underappreciated stories of 2023 was that you had this big supply side shock, which is that the labor supply in the United States grew at more than 3 times faster than the underlying population, right? So the population grew at 0.5%. The labor supply last year in the United States grew at 1.5%. A lot of that was because of a huge surge we saw in immigration. Some of this was catch up because in the pandemic years, some of the official immigration numbers came down, but a lot of it was historically we've seen that whenever countries face labor shortages, generally more immigrants find their way into a country. And remember, the data I'm talking about here is purely official numbers. If you take the illegal numbers on top of that, really the immigration surge last year was massive. The problem is that this has a big political backlash, and we're already seeing it here. When you get a huge surge of immigrants, and we have to be sensitive to this, there are a lot of people who get stirred up, saying that this is disturbing the social fabric of a country. A lot of nativist tendencies come up, even though these countries arguably need immigration,
labor, yeah.
just because we are running out of
Not
labor.
enough workers.
Yeah, the demographics have turned.
One of the things, because you do so much work historically that people may not be aware of, is this is not something new. You had a nativist movement, I think after Teddy Roosevelt in like 1910, 1915.
Absolutely
We'd
true.
had these high percentage of immigrants in the United States, and you had the same kind of backlash.
Yeah, so these are cycles which come and go, and I think that we are likely to see a big backlash against it. So, but as I wrote, that having these crackdowns on immigration, which is what I think many governments are now veering towards, could be good politics just because it stirs up a lot of sentiment, nativist sentiment, but is possibly bad economics because the same immigration which led to a cooling down of wages, easing labor shortages, also helping raise consumer demand, those factors go away. So this year in 2024, as you crack down on immigration for the next year or two, you're likely to see possibly some labor shortages and others come back, everything else being equal. Of course, the economy is slow, that's a different issue.
And this is, I know you look at this topic all the time. This is something we could spend more time on and maybe circle back around on, because this is going to be a big front and center issue
Right.
for all the Western countries going forward, because you have a declining population in places like Japan and Italy, right?
Yeah, there are 50 countries in the world today, Greg, where the working age population is now shrinking. To put this in perspective, in the 1980s, there were about 2 countries in the world. Now, you have 50 countries in the world where the working age population is actually shrinking.
And even the United States will need immigration just to keep the working age population at the same level, right? Isn't that, even the United States is almost there?
Yeah, because the birth rates have dropped. So even though the demographics in the United States is better compared to the demographics in a lot of Western Europe, Japan, China. China reported numbers just now which showed that last year, officially, the population contracted by more than 2 million.
This is a big topic, and I know you'll do more writing on that. Let's go to the notion of resilience, and you saw it in 2 places. Let's first of all start in the United States, which, if you went back 12 or 18 months, there were not many people saying that, maybe a soft landing, but there was going to be much bigger problems from an economic standpoint than have occurred.
Yeah.
And you've written on that. And then we'll come to Europe, which is actually off of an admittedly worse base.
Yes.
Surprise to the upside as well. So let's talk about the United States first.
So at this time last year, more than 60% of economists in the United States were predicting a recession.
60.
Yeah, 60%. Never in the history of United States have economists as a group predicted a recession. Issue is, why did they get it wrong? I think a lot of it had to do with the fact that the interest rate sensitivity of the economy has come down, because many people, whether it's corporations or households now, take their debt or have taken their debt at fixed rates. Now, that doesn't mean the problem's gone away. All it means is that it's going to take a long time for it to play itself out, because people will still have to go and refinance. I think what 15% or so of the stock comes up for refinancing every year. So people still have to go and refinance. And when they refinance, it'll be at a higher rate. Just that the shock is not instantaneous. The shock plays itself out over a long period of time. And the second thing is that so much of the funding, as you know, and so much of the market has moved now to the private markets. And the mark-to-markets there tend to come with a big lag compared to the public markets where it happens instantly. So I think these are some of the factors which are likely to be a drag on the US economy in the next couple of years, but just the fact that it's not an instant shock, which is what many people were sort of expecting.
So you do still see slower growth going forward as these things factor in. The other thing I thought you were going to say is pandemic money. Did the, there were all these payments made by the federal government, even some state governments. Was that part of the reason why the U.S. consumer and the U.S. economy's held on here longer?
Because even as late as October, there were some of the pandemic checks were still going out to corporations and stuff under the ERC and stuff. So in general, I think that a lot of factors combined to keep the U.S. economy a lot more resilient. But going forward, it's possible that we still avoid a recession. I don't think there's any big shock out there which one sees to cause a recession after this. But the air may still come out of the balloon slowly as the world adjusts, or America in particular adjusts to higher rates over time.
Now let's talk briefly about the Europeans and the resilience you see there, the better performance of both economies, stock markets, and then we'll keep going here.
At this time last year, one of my forecasts was that Japan would stage a big comeback. And Japan did have a big comeback.
You called that well, yes.
Yeah, but I think that it's always very interesting when you put something out there which sounds so contrarian, what the reaction is. So when I put the Japan forecast out there last year, a lot of people were like almost aghast. How can this even be? And then we got that. Similarly, this year, when I spoke about the fact that Europe may be more resilient than we think, not that it's going to be some superstar economy, just more resilient than we think, given how low expectations are. I've got a similar pushback that how can you say anything positive about Europe? Isn't this the new hopeless continent? Or as someone used to describe it on Wall Street, it's just a giant open-air museum. There's nothing really happening out there.
Boy, that's tough.
Yeah, so you get these kind of sort of almost pejorative descriptions of Europe. And my point is this, that expectations of Europe are very low because it's already been skirting with a recession. But there are two things. One, in contrast to America, a lot of interest rates in Europe that people locked into were really into floating rate, not fixed rate. So they suffered the shock much more instantaneously compared to America. Second, that Europeans in general, because they face so many crises, have been much more risk averse. So a lot of the stimulus checks, the Europeans ended up completely saving those. Yeah. Whereas in America, of course, much more sort of optimistic or whatever about the future.
Checks came in and the spending went out.
Yeah, and so the entire excess savings have almost been wiped out as far as America is concerned. And the third factor is that the energy shock that Europe faced was much greater in terms of the sticker shock to your utility bills and other things. So these are some of the factors which may make Europe more resilient from a very low base. I mean, I'm talking about the fact that most people, if Europe were to be in a recession now, it's close to it, no one would be surprised.
And many people think it is.
Right? It is, but if Europe ends up surprising a bit on the upside, even if it grows by 1.5%, I think that'll be a big upside surprise relative to where people are positioned today.
And you've made a good argument as to why that might take place. So let's go to another part of the world that you do a lot of writing and analysis on, and that's China, where economic conditions seem particularly challenged. And that's the point you're making, that it's a tough road ahead for them. Talk about how tough that road's going to be and why you think that.
Yeah. So, Greg, for years I've spoken about how China's demographics, debt situation are quite perilous, and that's going to be a big drag for growth. On top of that, now you have the de-risking which is taking place, where a lot of global investors because of the geopolitical tension and the way that China is moving in the direction, want to cut back their risk. So foreign direct investment in China for the first time has turned negative, net FDI, right? So these are major changes which
These
are
were massively positive 5 and 10 years ago.
yeah, China, was attracting, I think, every quarter at the peak, $100 billion in foreign direct investment, and that sort of takes into negative territory in the last quarterly data we got. So huge changes happening as far as China is concerned. And the fact of the matter is that they keep reporting these GDP growth numbers, which are exactly in line with what the state says, 5% or so. The problem is, as they say, the first step to a cure is to admit the problem. If you go on telling the world that, listen, we're growing fine at 5%, then there is no urgency to take any action to remedy the underlying problem, which is that the property market there is nearly bust. And we know that in America and other places, once the property market goes bust, you need to take some serious action to clean it up rather than just hope that the problem will disappear.
It's actually one of the strengths of the American economy that we continuously do that. You take the pain and you take the action.
Well, yeah, we did part of that, but of course the topic of the book, which we'll discuss later, that we have our tolerance for doing that has gone
down. I know that's what's
has gone
coming.
down much more like over time.
Although higher than still other places, including particularly China.
Yeah. So I think that in China's case now, that's the real problem, that you've got an underlying property market bust, plus you've got structural issues of declining population, actually declining population growth, and you have a debt load out there which is much bigger than even the United States, even the US is a much richer country. And then you have all sorts of doubts about what exactly Xi Jinping doing in terms of how much state control is he reasserting on this economy, and does he believe at all in a free market economy? So you got all these factors out there, and so therefore I feel that China's growth trajectory is going to be a lot lower, and it already is in terms of it. And so China's ambition of catching up with the United States and becoming the world's largest economy may never happen in our lifetime.
Can I, maybe for our listeners, the notion of growth and the fact that it comes from both population growth and productivity growth. Can you talk about that for a second? Because you've mentioned several times the population decline, not just in China, but in other countries like Italy and Japan. What kind of headwind that creates on growth in those economies? Because you don't have there's only two sources of growth, population and productivity,
exactly.
Right? Yeah.
So like historically, in fact, if you look at it, population growth has contributed at least a third, if not half, of overall global economic growth.
Really? It's that much?
It's that much. And the second half obviously comes from productivity. And no country in economic history has been able to grow rapidly without good demographic growth. No country. Even when China was growing very rapidly, it had very good demographic profile. So no country's been able to do that. And even for the global economy, that the real two big surges in growth happened. One happened after Second World War when you had the baby boom, which took place. Because a lot of positive demographic growth also has a rub-off effect on productivity with new people coming in. So I've always said about demographics that it is a necessary but not a sufficient condition for high economic growth. But without good demographics, it is impossible for countries to grow rapidly. And that's why many countries from Australia to Canada, which have seen a much greater slowdown in their domestic population growth, have become so reliant on immigration.
Yeah, Canada's done a significant amount. This is going to be a huge topic in the United States for years to come. Let's shift to, we have a couple more topics here in the time. One is the Magnificent Seven.
Yeah.
And you've done a lot of analysis on this, and you've done a lot of writing on it. You think that the phenomenon, the seven of them, is over, and there's a split in growth rates and likely stock prospects among the Magnificent Seven. So let's talk a little bit about that.
So my point is that there's a lot of hype about AI. I think it's a fantastic tool in terms of what it is. It's as revolutionary as anything we have seen, including the internet. But it takes a while for you to be able to monetize. Over the last year, it's lifted all these mega cap tech stocks because everyone thinks that AI is here and only these stocks with lots of money and resources will be able to benefit, whereas many of them aren't even there in the AI spaces yet. So I think that one of the trends I speak about is that at the very least, we'll see a splintering of this Magnificent Seven. That last year we spoke about this Mag 7 as if all of them have equally good prospects and they were all moving in lockstep. That you're likely to see a splintering of that this year as both there's a reality check on how much AI and how soon it can deliver, especially the monetary benefits for these companies, and two, how many of them are legitimately in the AI business and how many of them are just riding the hype around it.
So let's do one more, which is, and you always get into popular culture, which is fun, and that's what this top 10 list really covers the gamut. And you're a historian, and I know you read a ton and you watch movies. So Hollywood and Napoleon and what's going on there?
So I'm a big movie buff. I love going to international film festivals in particular, and I've seen Hollywood over the years. And I was almost dismayed when I saw Napoleon. The director, with his very sort of Hollywood progressive agenda, wants to just show a movie to make Napoleon almost look like Putin. His entire sort of motive is, hey, let me show you what a mass murderer he was. And he puts scenes in the movie which the historians were like aghast that this never happened. He's slapping his wife and stuff, even though he was a big liberator of women, like in his country. And of course, every emperor has dark sides and there are lots of sins committed. But generally, even today in France, 75% of the French people hold him in very high regard. And yet Hollywood wants to make a movie just to make a political point, an agenda. And that sort of got me thinking that there's so much discussion in Hollywood as to why our box office revenue is doing poorly. Why are people not going to the cinema like the way they used to do? And the blame is often put on the door of streaming services and other forms of entertainment. I'm saying that's fine, but if you're going to keep making movies like these, which only cater to a certain very progressive community, you're completely locking out more than half of America. So my point is that Hollywood's got to go back to how do you just entertain people? Right. And that's one of the main reasons I think, apart from obviously the other things which are well discussed and agreed upon, as to why ticket sales in Hollywood are on a decline. And I think that trend continues.
So I wanted to tell all of our listeners, this is the kind of intellectual capital and content that we capture within the Rockefeller ecosystem. Ruchir is chairman, again, of Rockefeller International. We're thrilled that he's in that role and a partner of ours. And we hope you enjoyed it. Look for the top 10 lists all over the place. And look for Ruchir's book coming up in the middle of the year. And we will be back in early 2025 with the top 10 in 2025. So thanks so much.